Hello friends, today I'm going to show you this insane 1 minute fractal and MACD 99% win rate strategy with Fibonacci. So let's get started. So what you're going to need for this strategy, for this insane 99% win rate strategy, is for you to have a plain chart and then go to your indicators tab. This is the one right here, and I'm going to show you how to have them set up on your chart. So click the indicator, then type in fractal. This is the Bill William fractal. You just click it and then it's going to pop up on your screen like this. So how do fractals work? So basically you have a swing high, whereby you have 3 candles or you have 5 candles, right? So basically you have this candle being the highest with 2 lower candles below this candle right here. So you have 1, 2, 3. 1, 2, 3. This one is the highest of the 5 candles, right? So it's going to be something like this. You have a candle which opened up like this, the previous candle which is going to be around there, and also another previous candle right there. And then you have another candle forming around here, and then another one right here. So this would then form a fractal. Depending on which shape you choose for your fractal, you can either choose a circle or a cross. This is how your fractals are going to look. So this one, the main idea of a fractal, this is a swing high, this is a swing high, this is a swing high, this is a swing high. So we're basically going to observe how the market moves, right? So let's get back to another indicator, which is going to be your MACD, right? We're going to add the MACD, which is going to help us in finding whether we're in a position in the market where we should be selling. So yeah, and we'll be able to get our sniper entry. So let's add our MACD. So again, with adding your MACD, you just simply go to your indicators tab right here, and then you click your indicators tab, you type MACD, which is your moving average convergence divergence. So you click it right here. It's going to pop up not on your chart but below your chart. So this is where we're going to observe the strength of the market, right? This is where we're going to observe the strength and where the market is most likely to go. And we're basically going to be using these moving averages right here. We're going to be using these lines right here and also these volumes right here to predict whether the market is most likely to go lower. So with this strategy, you are guaranteed to get winning trades as long as you follow the rules step by step. So right now, what we're going to do, we're going to discuss how to find the trade. So when you're looking for the trade, we are going to start on the 15-minute time frame. And basically what we are going to observe is the area whereby we have a lot of swing highs. We have multiple swing highs right here, and then we're gonna observe price behavior. We want the highest swing high to give us a break of structure and then a retracement to then give us our entry. So for example, we had multiple fractals here, which are multiple swing highs, but then price ended up trading above these swing highs, and then this fractal high here ended up being the highest fractal until we broke this fractal right here, right, aggressively. And then when we trade back to this fractal right here, we can get our entry. So ideally where you want to look for your entry is by using the Fibonacci. So the Fibonacci helps you in understanding how far the market has retraced based on the move that you got. So if you get a bearish move like this, and then you want to understand how far the market came back into that bearish move, then you are going to use the Fibonacci tool. So we want to observe our entries around here, ideally with 10 to 20 pips stop loss, based on however or which one you're comfortable with. Then yeah, you're going to choose that. So in this case, we had this example here, got a sell-off, possible entries around here, but you saw that it did trade into this area very aggressively. So your entries can also vary. You can either decide to enter from here with your stop loss around here, around 20 pips. Your target has to be around minus 0.5, so you can see here we ended up hitting our take profit, which is 1:3, and then the market turned back. I want you guys to stay tuned. I'm going to show you another example at the end of the video, which is just a bonus of how you can get a smaller stop loss around these areas. So let me show you another example right here which happened today. So basically we have this area on the M15, this area right here. Then if we go to the M5, we can see we have multiple highs right here, and then the market came back, trade above these multiple highs, and then we have this area, this candle right here as the highest fractal, and then we broke this lower fractal right here, this last bearish fractal before this one right here, closed below it, and then we use our Fibonacci tool, and then we get our entry around the 60. Can choose to use the 10 pips or 20 pips stop loss. So in this case, you can either opt to use 10 pips. Why should you choose to use 10 pips for the setup? Is because if you look at these areas right here, our stop loss is going to be above this area, so we don't really need to be scared when our stop loss is here. But if you look at this example right here, I'll show it to you or go back in time. So your target is also the same, going to use 1:5 right here. So take profit hit, and this is how you look for trades. And if you have any other questions, feel free to ask me in the comment section. Make sure that you do like and subscribe, because there are so many YouTubers that you may watch each and every day. But if you feel like this information was really helpful, make sure that you do subscribe, share the video, save the video so that you can be able to watch it later on and not miss out on other videos. So with that said, if you're liking the video so far, let me get back to showing you what I promised you earlier on. So basically how you're going to use this MACD right here, you're going to say fine, we have this moving averages moving higher, and then we have a bullish candle, right? Whenever we see them crossing right here and then breaking this area right here and then breaking this area, whenever they cross, you need to see it breaking this lower fractal right here, and then it breaks that lower fractal, and then when it makes the retracement, you need to see it showing you bearish moves. When it's going higher, you need to see it going lower here, and then you take your entry at the 61.8 with your 10 pips stop loss, and then your target has to be at 1 minus 0.5. So if you look at this one, this is where the target is, right? This is the target right here. Make sure to like, subscribe, share the video, save the video for later on. If you want to rewatch it, you can feel free to download it. So see you guys on another one.